Glad to have you back. You're watching Newsday. Following the launch of the African Economic Outlook 2020, amid the COVID-19 report by the African Development Bank, Asian markets continue to affirm Africa as the prime investment destination. To gain better insight into the investment landscape across Africa, Southern African Times is organizing a session with leading experts to unfold the impact of the pandemic on the African investment landscape and the struggle to facilitate economic recovery. Now, joining us this day is the CEO of the Southern African Times, Farai Muvuti. Thank you for joining us.
Thank you so much for having me.
Now, let's start by asking what the impact of the pandemic is on the economy and the political risks in Southern Africa.
Well, of course, naturally, due to the pandemic, we've seen a slump in FDI inflow, and of course, a subsequent reduction in terms of intra-trade as a consequence of the pandemic. So, if we look at the stats between January to about July this year, we're at about in total the continent drew in about 16 billion of investment compared to a 23 billion mark in 2019. So we've seen a slump, and it's expected that, of course, we saw a further reduction further on during the year, between 25% to about 40% in terms of FDI losses as a consequence of the global pandemic, of course. So that has a direct impact on the abilities to create employment. Africa needs to be creating at least 1 million jobs every year if it is going to meet up with its global development agendas and its goals in terms of the SDGs as pronounced by the UN as well as the AU and all other development partners. So in order for us to do better in that, we have chose to host the Investor Roundtable tomorrow, in which we'll be talking to policymakers as well as private sector, private players, in order to see if we can encourage not only FDI inflow from outside, but actually intra-trade within Africa, leveraging on the Africa Continental Free Trade Agreement.
Indeed, Farai. Now, how will the investment landscape be different for economies across the continent after COVID-19, you think?
Well, I think it'll be relatively the same. We have had a lot of infrastructural development issues, and so a lot of our investment targets should be towards infrastructure, creating digital infrastructure as well. And I think that problem will still remain. And I think it's now a matter of Africa recentering itself, because it still remains a prime location for investment. It is the next China, if you will. You still can get better returns at least over 20% returns in investing in Africa than anywhere else in the world. So I think we have to start discussing that question. We need to start preparing ourselves and positioning the continent for that investment, but also promoting and creating domestic policies that encourage domestic investment equally. It's one thing to say that we are looking for outside investment, but at the same time, we have to create environments that nurture local investment as well. So the ease of doing business should begin at the local, at a local level. So taxing regimes for companies that are doing well and performing well, and having a sort of a tax rebate for companies that are doing well, or tax incentives, if you will. But these are discussions that can be held with experts who have the experience of local businesses, as well as those who have the policymakers who can then discuss the issues that they find with the taxing regimes that tend to be very difficult and quite a lot of red tape added to local businesses. So in as much as we want FDI inflow, I think the thrust of us as the Southern African Times would like to see the easing of doing business for equally in traders and local business players in Africa.
And Farai, talking about policy makers, how efficiently are governments working to mitigate the long-term impacts of the pandemic across the continent?
Well, I'm currently in Zimbabwe right now, and we've seen during my stay in Zimbabwe, I've noticed that government has taken quite serious measures to ensure that they can contain they can contain the virus, and they've been building. There's been a lot of awareness campaigns. There have been drastic actions when it comes to be it people who don't adhere to the actual lockdown laws, just to ensure that people are safeguarded. We've seen a slight shoot up in terms of deaths going on, going up in the last few weeks, and so as a result, there's a sense of seriousness. And if I look over to South Africa, there is that same sentiment. They've been a banning of the sales of alcohol in South Africa in particular, which tends to have a connection to the societal performance in terms of the potential of adhering to the lockdown protocols. Now, in terms of investment-wise and the trajectory for investment, we've seen that critical sectors in Southern Africa, in particular mining and manufacturing, have not been hindered. They've been allowed to continue performing in as far as long as they adhere to the safeguard COVID protocol rules. So there is a drive to ensure that they have they continue to manufacture. Critical industry continues to go forward. I think one of the interesting stories, I suppose, from a policy perspective, during my time in Zimbabwe, I had there's a company, a mining company that is Canadian predominantly, and it's called Caledonia. And it was quite surprising to learn that this mining company has actually increased its dividend payout to about 23% during COVID period. So clearly, and when we were asking around what they found to be the reasons why they were able to do so, they said, well, government so far, in as far as it's open for business mantra, has been consistent, and as a consequence, they've been able to invest more and have higher returns. So it's quite interesting.
Yeah, it's good to know that companies are actually paying out that much dividends. Now, no doubt African economies have been hit hard by the pandemic, but how resilient are they? And why is borrowing escalating astronomically during this period without recourse to long-term consequences?
I think this is a very critical question, and I think we'll have to look at it from a case-by-case basis. If you look at South Africa, for instance, when it came to taking out debt, and as far as to drive growth during the era of the pandemic, they were very specific about the type of debt that they were getting. So I remember seeing the report. We did a report on the South African finance minister, who was arguing that the sort of investment that we're looking for, or rather the debt that we're looking for, is one that ensures that there is no the interest rates are within range. In fact, almost from 0 to less than 1% interest rate. And I think that's the debt that most countries have been going for in light of the opportunities that the IMF put together, the packages and the infrastructural funds that the IMF put together during the period of COVID. So in terms of debt resumption and moving forward, I think it's going to be a very interesting period for us as a continent, and to see the kind of the decisions that were made in short term in order to forecast better long-term goals. It'll be interesting to see as we discuss this tomorrow with experts. So it's an area that we'd have to delve into more. But yeah, I think it's a big subject matter that has a lot of its pitfalls, but also I think when elucidated by actual policymakers, we'll get the clarity as well.
And talking about the forum tomorrow, what is the role of public infrastructure in economic recovery and development as stakeholders anticipate at the forum?
Well, one of the problems that I think the continent faces, especially within the region, is its infrastructural gap. I think we're about, it was projected to be about maybe 20 years behind in terms of where we should be from a global standard. So a lot of our investment has to go towards, or rather we should encourage a lot of investment towards infrastructure. So we've been seeing quite a lot of that. If you look at the last Kenyan, the collaboration between them and the Chinese, and the introduction of speed rail within Kenya, and we also saw the infrastructure of the huge infrastructure between in terms of pipelines and so forth going in within West Africa, an investment from Orange, I believe it was. So there is a large need for infrastructural gap, because our infrastructure is going to be the bedrock that then creates the high number of employment that we need if we are going to surpass the middle income middle income status within the next 10 to 20 years as a continent and as a region. But equally, there is need for regional collaboration for us to be able to have the flexibility and the laws in order to draw in a greater amount of funds. So one of the problems that you would find is that, for instance, South Africa is a small market if we're drawing in huge investment. If you're looking at perhaps drawing in a company such as the Toyota to come in and build big infrastructure. But when it collaborates with Zimbabwe, Tanzania, and so forth, it means that regional bloc grants an opportunity for these companies to have to explore the large scale of the region, and equally it promotes infrastructural development amongst within the region itself, so that transport processes are easier, and which should have a devolving impact on the cost of tourism within the region itself. So you encourage domestic tourism rather than relying on external tourism, be it the Chinese or the Europeans. We can have Africans traveling amongst African countries. We can grow our current intertrade within Africa itself, which is currently at less than 20%, to at least 35 to 36% through infrastructural development. So infrastructure plays a major role in our ability to build capacity, to be able to transform and to be able to create the necessary employment, the necessary facilities, and capacitate our economies and our people so that they can meet the industrialization world. So infrastructure is at the bedrock of that.
You're right, Farai. Infrastructure is key for any meaningful development, and we've already seen the footprint of the Asians, especially the Chinese, in that perspective in Africa. So, in other news, what are the implications for strategic businesses and digital transformation of public services on the continent?
Well, I mean, I don't want to preempt all the line of questioning before the event. You guys must attend. But I think if we're to give you a quick snippet of what to anticipate, I think there's a huge excitement around development, technology developmental strategies that are coming in. Government policies. I think governments in Africa are catching up with the need for digitalization policies, and I don't think Africa is backward in that sense. I mean, M-Pesa existed before Barclays in the UK or anywhere else in the world had the facility itself. So Africa has been quite ahead in terms of our mobile transfer money, how we've been able to interlink our diaspora communities with the African community, with the African-based communities. So it's about leveraging our African diaspora to make payments more convenient, to make payments more instantaneous, so that we have more people banking, and also changing the mindset of banking, being just a building. It's, now the bank can be on the phone, and that's something that we notice is growing with full potential. I can only speak. I'm currently in Zimbabwe, and Zimbabwe has over a 270% mobile penetration rate, right? And it's top 6 of countries that receive large remittances. Okay, are in the continent, by the way. So clearly, Zimbabwe has been able to leverage its access to technology and increase its amount of monetary participation in the economy.
All right, Farai Muvuti, the Southern African Times Chief Executive Officer, would have to let you go now, so you don't divulge all that you intend to at your session tomorrow. All the best, by the way, and thank you for joining us on Newsday.